Then I was able to like scale to 2.2 million plus portfolio
Wow.
within 1.5 years. Yeah.
Hello, everyone, and welcome back to the Property Hustlers Show. My name is Andrew, and today Ping and I are joined by Suman Chakraborty, who is a very successful real estate investor as well as an IT consultant, and he also does social media consulting. Suman, it's very great to have you on the show.
Thank you so much. Thank you so much for having me.
Now, Suman, listen, Ping was telling me a little bit about you, and from what I understand, you are actually quite successful in your real estate endeavors in actually a relatively short period of time. I understand you only came to Canada in 2019, started real estate investing in 2020.
Yes, that's correct.
So you came right in the pandemic.
Yes.
You just came running with some steam, and you're already
Absolutely.
deep in real estate.
Times were tough, and like I also, as you rightly said, I'm into IT consulting. So I had to maintain my job, and I was on work permit before getting the PR. So I got my permanent residence in November 2020. I had to maintain my project in order to maintain the status in Canada. Even before I start real estate investing journey, I had a lot of hassles which any person who is coming to Canada without being a citizen or a permanent residence has to face. In November 2020, I got my permanent residence, and that's where I decided to join Investor Mel and Dave. So they have an Action Family Mentorship Program, and I have been following them for quite a while. And from there, I followed the systems. Then I was able to like scale to 2.2 million plus portfolio within 1.5 years. Yeah.
So that's such a short period of time.
Yes, and frankly, like this kind of numbers, like $1 million portfolio, I could have never imagined. I come from India, where I had couple of properties, so this means a lot to me. And I was recognized by Investor Mel and Dave as well in one of the conferences.
Did you buy your first property before you signed up for the program, or did you do that after?
No, after I signed up for the program.
So,
yeah.
Okay, so you got your mentorship
Yes,
before you started
mentorship,
executing.
because I always
Smart.
believe in investing in education first. These are real estate is a high pressure game. You need to have the right mindset, system, community, and what are the different financing strategies and everything. And this is it was new to me. That's the reason I had to invest in my education first.
Mel and Dave, right? They teach no money down strategy, right?
Yes,
All right.
correct.
And how successful have you found that?
Yes, it was pretty successful, and I was able to use some of their strategies. Like I just scratched the surface of what they teach, and I was still successful. So imagine like what we can tap into. I'm yet to do all the stuffs, and even they have been pretty successful. So I was inspired by their strategies of no money down. Here I was with the mindset that a maximum a person can buy 1 or 2 properties, and they were talking about like 200 plus units. So that was something I was very curious about to know. That's the reason I joined after I became a permanent resident.
It's interesting, especially with your background, that you came here in 2019, and you think about it. It sounds like one of those classic success stories. Somebody comes in from abroad or as a foreigner comes in, and they're not clouded by all the doubt. They just come here with some hope, some belief, and then they invest in themselves, invest in some education, and then make moves. They don't question everything and bury themselves in doubt and too much analysis that prevents you from ever acting. It sounds like you decided to just come here and just do it.
I always believing like follow the experts. Don't hesitate to invest in education. I see many people get stuck here by the price of the program, but they don't see the value in it. So I always see value over the cost. So that is something where I see most people are failing.
Let's talk about your current portfolio right now. $2.2 million.
Yes.
How many properties
so
are there?
there are 2 properties, both are in Woodstock, and recently we also got the legal duplex conversion. So we are trying to increase the value of the property and also increase the cash flow, because now the interest rates are going so high. So we got the conversion done by first or second week of October, which should be completed, and we are going to get the tenant. So it's already in place right now. So that increases our cash flow by around $1,700 to $1,800 per month.
You seem very calm. So I'm assuming then that these rising interest rates, they're stressing a lot of people out, right? And people are wondering, how do I adjust? How do I pivot? Is like the duplex approach a pivot point for you? Is that something that you're doing now because of rising interest rates?
We had that plan in mind already.
Yeah.
So, but with the interest rate, it makes more logical sense, like how you can make your existing portfolio increase in value in terms of income generation. Another strategy that I'm following now is I'm going for more bigger multifamily units. So right now we are working on a Newfoundland property, which is a 8-unit property. Now my jump is to go on more on the higher units, because there the lending rules are different, and then also you don't have to depend on one tenant. I'm
Yeah.
trying to nullify the risk and increase the cash flow and everything from a single property. So that's our next strategy that we are following.
Is that the very first project that you are going to do it from out of the town?
Yes, so this will be one which is going to close, and another project is in Alberta, which is again like out of province. I am a bigger fan of out of province, because then I'm not tempted to go and see, and I believe in building the right team. That is very important in real estate investing.
It's interesting I believe you have the right mindset, because a lot of people, when they say, oh, you have to build a team, they don't really know what that often means. But I think the team means you have people that when problems come up, you can consult with, you
Exactly.
can talk to, give you to work out solutions.
Exactly. And that's why everything connects from, investing in education and community, the property and the team and everything I was able to find through the community and mentorship. Many people who saved that initial cost of education, they don't see the value they are losing and the opportunities they are missing out, because now I'm more interacting with people in the community. I invest a lot in networking, adding value to people. So a lot of good references have come, and now I have even started raising capital from people who don't even know me, and it comes through good references. Now we are able to raise 6-figure capital for investing in our properties, and people are happily able to do it.
Did you ever think that you would be in the position now where you'll be doing this, raising hundreds of thousands to do projects?
Frankly not. When I was in 2020 November, I joined, I couldn't even imagine where I'm right now. And there is always a learning, everyone is learning, but it really fascinates me that people who haven't even seen me, it really fascinates me that people see your work, trust your work, and it increases your responsibility a lot, because they are trusting you. So I always make sure that you have to build a very strong relation with your investors. Treat them on highest property, because they have trusted you with the money, which is the hardest part.
Very quickly, because we actually right before we started filming, you also mentioned there are obviously some challenge that came along with it. Can we also quickly talk about that?
Yes,
especially for the 8plex, because I know
and before 8plex, I will also share one challenge which I think every person like me who is not from here, they face. When you come here on a work permit or a student permit, even before you start real estate investing, you have to deal with a lot of hassles. The paperwork, the opportunities, it's not that easy. Even before I began my real estate investing, as I said, I had to focus during the pandemic time. I was more stressed out about losing the project. Like there was a point of time where I even called my car manufacturer that, I may have to go back to India within 2 weeks. What should I do about the car? These are very stressful, which even any real estate investor has to start. So that is the biggest challenge I feel as a a person who is on a permit.
Wait, just so I can understand, was that due to the problems with immigration, or was that due to problems with your projects?
The problem is, like, if you are on a work permit, let's take Suman on a permit versus Suman on a permanent resident. Okay, if I lose my project, I don't have a valid stance. Of course, there might be different ways. I technically cannot stay because of my stay is majority depend on my work permit status. But if I'm a PR or a citizen, even if I lose a project, I can still stay in the country. That stability is much more higher. That is number one.
There's a lot more risk.
Yes, it's a huge risk. Like imagine, I did not know what to do about the car, about the property. Like I didn't even buy a property with the fear that, if there is no stability, what to do. And that is the reason when I got the permanent residence, I knew that at least I can start my investing journey more confidently, because no matter what, I can stay here, find some different income streams. I have time on my side.
Yeah, the pressure is much higher.
It's very high. Exactly. The moment you put it under contract, right? Your timer starts, like everywhere there are dates, condition removal and everything. So that is a lot of stress. And as you both rightly mentioned, like real estate is not a very easy path to travel. Not just me, many people are facing, like even the established ones, they face a lot of stress. So to whoever wants to start their journey, I will say that, you have to deal with a lot of stress. It's a good stress. I'm not trying to scare anyone.
Stress makes you grow.
Yes, exactly. So, I was able to grow. Like now the previous amounts of purchase price seems very okay to me. So you become comfortable with numbers. So it's a good stress. But people, those who are thinking, just enter into real estate, money will be everywhere, you don't have to do anything. That's not the right thing. So that is one more challenge. And regarding the 8 unit, closing was supposed to happen in September 15th. Now, but due to title search, it's still getting delayed. There is a lot of anxiety. And then there was a time where insurance companies, they took 3 weeks. Then they said, we are not going to give you the insurance. Have a lot of buffer because many unplanned things will happen.
The uncertainties.
Uncertainties are huge, exactly. Like the dates keep on pushing. You are dependent on some person. That person is not responding. You have to do a follow-up. So I do a lot of follow-ups. You need to be on track because it's on you, that it's your property. It's like your baby. If you are not hungry, if you are not following up, no one else is bothered. Then you are relying on other persons.
Yeah, and by the way, this is a price that every real estate investor pays, right?
Exactly.
Like behind the scene, because the moment that you have uncertainty, you're relying on some other people's expertise.
Exactly.
But the biggest stress comes from when you don't have anybody to call.
Exactly.
Right. And I think this is what's preventing from a lot of investors investing out of town, because now they gotta stop building the network in that city.
Right.
And Newfoundland, the insurance agent or broker in Ontario may not be able to actually support
do
you.
it. Yes, I called many insurance. Either they were not able to underwrite because of the number of units. One of the insurance company only does till 6 units. For them, anything above that, it's a straight rejection. Another was like based on how old the property is. They took 3 weeks to give me a decision. So that wasted a lot of time. And without insurance, like that's a key part. You have to deal with a lot of stress. And this is just from contract to closing.
Did you know these things, these potential problems before you locked it in, or did you figure these things out after?
No, these frankly, for me, these are learning because every project is, I believe, is unique. Of course, there are some systems. You cannot have a complete blueprint where every step by step goes as per plan. So many things will happen here and there, and not just with me. Even many experienced people are learning and facing issues.
This is called having a right expectation.
Don't go with an expectation when you put it under contract that everything will go smooth as expected, because a lot of people are involved in that end-to-end transaction. Also after closing, like that's where again the real challenge starts. Many things we cannot find out, when the property is in contract. But as you deal more with tenants and all, more surprises come. You go and visit the property for out of province, you find out many surprises. So be prepared for that.
Did you see it first, or did you buy it without seeing it? Like
I got the inspection reports and everything.
But you didn't go there to see it?
No, not yet. Yeah.
You're a brave man.
Yeah, it takes a lot of courage, frankly, and you need to build the right references. That's why you need to have a good team. And even after that, there will be challenges. So real estate is all about how is your mindset, how much you can handle stress, and how much you can handle the surprises.
If you didn't pay for the mentorship, if you didn't get coaches and build this team around you of people who know, do you think you'd have the confidence to do what you're doing?
Definitely not. I have got deals from here. I have got people from here. Some of the people who are giving me private lenders, they have more confidence because we are in the same community. So they see your work. Many people who gave capital to me without seeing me, they were able to give because some of the reasons what I found out from them is because of the common mentorship group. Second, they see my work, what I'm doing. I keep updating on social media. So that has helped me. And the third thing is they do your background check. So they will talk to some of the people whom they trust. After that, they will give you the money. Many people also give you the capital because the person is the right person.
Actually, most of the investment project that we did is not because the project itself is so excellent or anything, because there's always projects that can outperform ours.
Exactly.
But it's because of the people that they have faith in.
So it is a huge responsibility that you have to take up. And it's good in a way because people are trusting you, and all you have to do is be responsible towards them and pay them back no matter what. That's my highest priority.
You say it easily, you have to be responsible to them and pay them back no matter what. But that's actually a heavy burden. It's a heavy responsibility.
Yes.
So for them to trust you, it is a big deal.
Right.
Ping and I talk about this all the time on the show, how real estate is a people business, right? People sometimes say, oh, how do you make money in real estate? You find a good product, you find a good deal, and you sell it to somebody.
Right.
People are more likely to buy or work with people who they believe in and trust.
Exactly.
And this is also why social media, I think, is very important, because they see your face enough times.
Right.
They see you talking about what you talk.
Right.
It reflects on your values, your principles, your morals.
Exactly.
Right. And they say, they look at you and say, what I invested in this guy.
Yes.
Right. And that's what they're investing in.
Yeah.
Because-
And also the most important thing is that you have no problem talking about your challenge. Right?
Yes,
a lot of investors out there, they're having trouble raising capital because they keep on talking about the pretty side.
Yeah, they ask me, how do you raise capital? I said, just be the person you are and let people trust you, and they need to know they're doing business with a real human being who can be trustworthy, who knows his stuff. Of course, no one is a flawless person. Even the experts, they make mistakes, but they accept it. So be courageous enough to accept mistakes, learn from it, and make sure that you are putting whatever commitment you are doing, you are living up to the expectation. If I can give one more example, like it was a very fascinating moment where one of the investor, she has never seen me. She invested with me a small amount. Seeing my response towards them, like they don't have to follow up with me. I keep a track and I'll pay them upfront. That's what they like a lot, Sometimes they forget and they thank me. What happened? This lady investor, she liked the professionalism so much. She recommended her friend to be an investor with me as well.
That's
so
awesome.
The person who has not seen me is recommending another person who has not seen me just because of the trust. So I need to ensure that the complete chain of trust is maintained.
It sounds like the way you're treating it too, it's you have an element of excellent, almost like customer service. You respect the people that you're dealing with, and you're providing what sometimes people think that doesn't matter, right? I've seen some investors say that, we're making money, don't worry.
Yes.
Right. But it's like, it's not just about that. It's about maintaining the relationship.
Right. And sometimes I even do, and I'm not recommending it, but it has worked for me wonders. Maybe in the matrix analysis, when you do, for the first year, I give them higher returns. It doesn't fit in the cash flow, and that's okay. At least you are keeping the other, as you said, right, customer experience. They are your highest top clients. So they feel happy, and I'm okay to give them a higher return, because real estate is a long-term game. I am more of a buy and hold with value add believer. So if they are happy and if I'm giving them a good value, why not?
So Suman, let's talk about how you structure deals, because we obviously you joined the mentorship program for No Money Down deal, and it has been very successful for you.
Yes.
So do you mind sharing a bit of how you structure deals with your investors or your lenders?
First, we understand, what are the income, expenses, some of the key parameters which are there, those things we need to do. And then I see that as is, how is the property doing and what will be the way out and how to pay back the investors. Then I need to see how much I can go above and beyond. So there is a certain limit where I can go as well. The deal should make sense in order for pay the investors. So once that is structured, then I start talking to investors, and mostly because I have a good pool of investors right now. They know how I deal with their money. That's how then I reach to them. So first I would say that get all the income, expenses, then do the analysis from yours. There are certain parameters which I'm being taught in the program. So seeing those, you get more confidence, whether the deal makes sense or not. Another question which I get from many people is, it's not positive cash flow. You have to be creative. Don't just try first, and if it doesn't work, don't eliminate it. See what are the ways you can structure. So that is very important.
How do you overcome that? Because I would assume a lot of projects right now, or at least 6 months ago or a year ago, they don't cash flow too well.
So like this Newfoundland thing, which was not cash flowing as is, then our team went there and they negotiated with the seller. We were able to explain that, look, if you want your money, the terms has to be in our side. So they can't have both. The same deal, which was not working as expected because of 83% seller financing, it made sense. So don't outright eliminate any property if it doesn't work in the first instance. Many people do that. These days I'm getting questions from a lot of people. They just look at the properties within them. There are people in near Toronto or Greater Toronto area. They just are looking in properties over there and then seeing that there are no deals.
But never get in.
Never get in. But I say them that you build your team. A lot of opportunities is there. There is tons of money for raising capital. There are tons of good deals, but you have to expand out of your comfort zone. That's the most important.
So by overcoming the cash flow questions, your strategy is to go a little further.
Go further and see what are the different creative financing strategies you can do. And sometimes also it's okay to, 1 or 2 years. At least for me, I'm okay. 1 or 2 years, do some little bit of cash flow, have some holding cost, take care of 1 or 2 years, pay back the investors. They are happy, and then you have your property.
When you're negotiating creative terms,
Yeah.
right, do you do this all through your realtor, or do you ever end up having to talk directly to the sellers?
So far, I didn't have to talk. I have all the team people who are finding out the deals and everything, negotiating for me. So that has been working for me.
No money down deal is a very attractive term to a lot of investors, and obviously you're doing this very successfully. The question that I have is that how much percentage or share of the project that you're taking on every single deal?
So basically, like how much percentage equity is being removed?
Yeah.
Is that the case? Okay.
For you being an active investor.
Got it. So usual structures are like 50% for the managing partners or the working partners who will take care of all the day-to-day operations, because it deals a lot. This gives me a sense even for raising capital. Like for example, if I'm saying that 50% is for working partners and there are two investors, one says why you are not putting money down, or what kind of work is there. That means it helps me judge the investor too. That means he or she doesn't know how much work it takes to find deals, research, and day-to-day operations, and I outright eliminate that investor. And another person who says, you know what, it makes sense to me. Always do that. So usual structure is 50% working partners, 50% money partners. That's the usual structure I've seen. I am mostly open for any kind of creative structures. As long as I am expanding, I like to expand my portfolio. Can be through private lending or through JVs or on my own. So I'm okay for structures, whatever is possible.
Do you usually pitch 50-50 like that first and then you negotiate?
Frankly, like so far for me, the deals have come on my own. Like few people reached out to me. They said they want to do JVs with me. I found a deal from a wholesaler. So far the deals have come to me. And the Woodstock properties, yes, we decided the structure upfront, 50-50 split and all.
And you actually touched on what was going to be my next question, which is you said some people came to you, but do you go and find investors actively? Like, is that would you say that that's a big part of your work right now?
Yes, some of them I had to reach initially, but now I have a pool. So first, whenever I get some deal or opportunity, I will reach out to them. I want to first partner with them because naturally they know me better and I know them better. And also I focus more on keeping my things updated on social media, because that's where the new investors also come. So for example, right now I'm doing the conversion in my project. So 2 new investors have shown interest as well. Both you have to do. One is work on the social media side and another like talking to investors. These are the 2 key things.
A part of your screening process is that the moment that people are kind of give a bit of pushback on the 50-50, right away you know that it's not someone that you will want to work with.
Exactly, because as you rightly said, real estate is about people business, right? So if they say that or they feel it doesn't involve a lot of work, I'm going to have problems if I'm partnering with them. There will be a lot of conflicts, and that's the last thing you want to do.
Right. So have you done any deals that you don't take up to 50, let's say 40, 35%?
Yes. So right now in the duplex in the Alberta, I'm keeping 25%. One partner wanted to do 50-50 with me, but there was another lady who was interested to work with me. So I believe in creating opportunities for people as well. So I believe in creating more win-win, and that's how you build relationships without reducing the partnership split of the person who reached out to me. He wanted to have 50 and me 50. So I said, okay, you keep your 50. I will reduce my 50 to 25 and then got my partner. So the person who got me the deal respects me because naturally I'm not reducing his share. The lady whom I collaborated, she's happy as well because now she is working with us closely. I always try to think how creative you can go. And this is the beauty of real estate. I love because you can structure your deals the way you want. Another example of creativity, if I can tell you. So one person, he joined recently, Mel and Dave, and he saw the social media like in the private groups. He was very impressed and I'm very happy, he felt that way. So what happened that he was having his birthday when he did his first private lending with me. He did his background check and everyone gave a great reference about me. So immediately 1 week joining in the program, he invested money with me. So it was during his birthday time. What I did was I said, okay, let me add $100 extra for your dinner gift in your first interest payment. He didn't expect that thing, but a small gesture also goes way ahead. So, you have to think in a different way. So, when people ask me, I'm not getting capital, I said probably they may have not thought differently. You need to have a wow experience. Like, how would you feel if if someone is giving me $100 gift card on my dinner, I'll definitely feel happy. So, think from how you will feel when the same proposal comes to you. And that's how you create a wow experience for
Yeah,
investors.
these are little things that make big differences
Big
in the
differences,
relationship.
big differences.
that's
So,
interesting.
these are the things. Then another tip. So now many people have reached out to me. So now what happens was many people in the investing community, because they are seeing the work, they want to talk. So I feel great that not only you are growing, but you are able to have a positive impact through your voice and creativity. Because I'm learning from many people. Many people have positively touched me. So I'm doing the same with them. Another thing can be start small. Maybe someone might be nervous. Like if I ask you 100K, you might be nervous. But if I say that, okay, let's begin with a $5,000. I don't need it, but let me show you how I deal with investors. Even that has worked for me. So you can risk 5,000 if you know me and you have some references, and then it leads to big opportunities as well. Don't directly like freak out a person by asking, I want 100 grand, and especially when they don't even know you.
By the way, it's really great that you're open to share that kind of information, because a lot of people do actually go to paid seminars to learn that kind of mindset, that
Right.
kind of creativity.
Right.
How would you structure the exit strategy for your investors?
Exit strategy for investors will be first like seeing how much the value of the property can go high. So you will need your team of players who can give you like what can be the value, see the comparables, to get a feel of it, and then try to go close. Sometimes it will go higher, sometimes it will lower. That's okay, but at least have a rough estimate of what is your plan with the property.
Like the
Are you
ARV or
Yes,
price value?
after repair
Mhm.
value. First strategy for me is always like, can I refinance? Like, I'm not a believer of selling the property, but if need be, I'm open for it. But
Mhm.
first, I will see how much you can refinance, or what are the options. That is number one. Then will be like, can you sell it if need be? And then what are the things you need to do? How much will be the renovation cost? Because that is very important. So consult with few people, calculate how much you can pay. And even if the deal, worst case, I always prepare for worst case scenario. So even if nothing happens in the deal, I will still make sure from my pocket or from my sources, I'll pay back my investors at any cost.
Okay.
So,
Do you contractually tell them that, or is this more just like something that you know?
No. So in the document, it's everything written that like I'll be paying this much interest, so that itself is a commitment, and we are in this game for the long term. I will always honor that part.
Oh, so
Yeah.
you don't go with a timeline, you go with a value, like property value. So
Yeah.
you don't end the relationship until the property value hits the target
No,
value.
for people whom I'm giving interest rate, that's like a 1 year, 2 year, then that has a timeline. And those who are equity partners, we are all in this game together.
Okay, so you have two types of investors. So that brings me to the next question, because
Yeah.
when you're approaching people, and
Yeah.
this is, I know, one question that a lot of people, when they ask, how do I raise money? How do I approach people? And how do I structure such a thing?
Yeah.
There's different ways where you can do traditional JVs, where I'm on title, you're on title, and
Yeah.
we buy the property together. The one is active and silent, where somebody's investing into me and holds an interest
Yeah.
in the property.
Yeah.
And then the other one is, you have a registered company and people invest into the company that buys the property,
Right.
right?
Yeah.
So do you do one of those, or do you do a hybrid of some of those?
Based on the situation, like one property, I'm personally on the title with the JVs. Another, we are going to form a corporation. I am up for any kind of combinations, and it's mostly hybrid. There is no specific system that I believe in,
Mm-hmm.
because every deal is unique. You are dealing with different people. Everyone's financial situation keeps changing. When the deal comes, there are certain specific things which will be constant, but many things are changing. Get a right lawyer and an accountant. I think these are the two key players which many people miss. They try to
Yes.
do things on their own.
Yeah, they think they know everything.
Right. And the third, I think, is the mortgage broker, because these are the three ways your deal gets structured. And don't consult a lawyer to form a financial way of structuring. So keep the structuring different. Like from tax perspective, structuring,
Yeah.
go to an accountant, go to lawyer for legal. Don't mix up. I have seen this as well.
We're looking at each other here because
Yeah.
I think the very first contract for JVs that we went to a lawyer to structure, and we were looking at it afterwards. I'm just like, if I was an investor and reading this, I wouldn't really like this contract that much.
Yes.
And now you're saying go to an accountant to do this. I think
Yeah,
that makes a little
yeah.
more sense. They
First
probably have more
account.
experience.
Yeah,
Yes.
yeah.
First accounting, set up everything, lawyers, and then your mortgage broker
Yeah.
for the financial structure. Like keep them separate because they have their own expertise, and these are three different departments.
Do you have a preference when you're doing these ventures and in terms of how you receive your funds? Do you receive your funds as equity share, like they're buying shares of the project, so it's performance based profits,
Right.
or do you get investors to invest as a loan to you? You pay a fixed interest rate, you make the spread on the profits afterwards.
So we are more like, so far we have taken on fixed interest rate, and now currently we are in the talks of the share structure. So we have not yet formed a share structure, those kind of things. But right now, the private lending is more on the fixed interest rate, and then the JV structures right now are just getting the money in the bank account, and then we spread it. So
Okay. To that, just because I also want to understand how you're doing it, is you would have, let's say, institutional lender, right,
Yeah.
who's going to be lower interest rate, and then you have an interest rate for the private investors that's going to be obviously considerably higher, but it's a
Higher.
smaller amount
yeah,
that you're collecting from them, so it's
Exactly.
higher. And what do you mind if I ask, what can an investor, like if I was going to invest with you,
Yeah.
what range of interest can one expect?
earlier it was in the range of 12%,
Okay.
unsecured, but now it's in the range of 16 to 19%.
Unsecured.
Unsecured, yeah.
Okay.
So
and contractually, if somebody asks you the question, how am I protected? What do you tell them?
And that is the reason, like, still date, those people who have trusted me, they have worked more on the unsecured. But my now next goal is to go for the secured funding as well. The interest rate will be lesser, of course, because you are getting more secured. So that's my next goal. So I'm working with lawyers to form the structure and everything in a way where I give another option, which I have not given so far, of secured funding.
Right.
So that gives me a bigger pool of investors moving forward as well.
Okay, there are actually a couple downside of what you're mentioning, what you're describing. The
Right.
very first one is that the institution lender may not like having another private lender on title,
Right.
So you might be like seeing that kind of obstacle very soon. The second problem that you're going to see is that maybe the lenders are going to promise you a lower return, but on the back end they're throwing in some lender's fee, you pay for the closing, for the lawyer's fee and all that stuff, and it really added up to like from maybe 6 to 8% up to maybe 11-12%.
That's the reason, like, my first priority is to talk to the people who have money sitting in the bank or in their funds, which is not doing work for them. Those are my first people to reach. Advantage being I'm doing business with real people and building connections. That's one, because I am helping them make money work for them. They get all the passive money.
Yeah, and technically speaking, isn't it a little more expensive though to go through them?
It is expensive.
But there's more flexibility.
There is more flexibility, and you can, like, if they know that 1 or 2 months here and there, they understand that sometimes real estate does some plan change and they are okay with it. You continue to pay the interest and then you pay back or do some, so you are more flexible there. Another advantage that I see is the credit score part. It doesn't show in your credit score because that's a private lending. If I pull from my line of credit, it straight away hits me very badly. But if it's a private lending, it's a money transaction and it doesn't hit my credit score.
Which would be a great way. Once you do the value add to your property, and then you apply for line of credit, that would be a great way to actually pay back your investment.
Pay back, exactly.
Yeah.
And another thing is that I keep my line of credits and all as backup too, in case my investors are my top priority. So I have some funds reserved to pay them if required. So I keep my money as much as possible to pay back.
That's why you will sometimes do like VTBs, like you were saying for the
Yes.
property in Newfoundland. So you have the
Right.
VTB
So that's
structure, private money. So when you're owning it and you have to refinance it, you look great on paper.
Yes.
So it's very easy. Okay.
Yes, and I
Makes
will do
sense.
the renovations, and then there is no rent cap in Newfoundland, so we can increase the rent, increase the NOI, net operating income, and then once the deal is in a very good position, I can refinance and then pay back the investors.
That's the beauty of the commercial real estate.
That's why I love commercial. That's why I said, like, my next goals are, Of course, here and there, if I get some good duplex, triplex, I'm okay with it. With partnerships, one of the people I was talking about, he has good ability to afford mortgage. One person has good capital, and I have the connections and the know-how. We can very well form a team with coming with our own strengths and even close a residential property. A lot of options possible. So here and there, if things are coming, I'm okay. But my main focus is in multifamily commercial side.
Do you feel like you're going to encounter any obstacles in your growth and scalability as you burr? Because that's what you're doing. You're burring properties and you're refinancing them eventually.
Right.
And the plan is to hold them long term. So you do refinance at some point through A or B lenders, right?
Right.
Do you find that ever hits like a plateau point where maybe you're going to not be able to refinance, even though you have some private money in them where it doesn't show on your credit?
Yeah.
But as you start to take on traditional mortgages, are you going to be hitting a plateau?
Not that I know of. Reason being is two things that I've heard, and so far I'm not there yet. But I know there are solutions to everything, because there are people who are earning billions of dollars in real estate.
Yeah, they obviously figure it out.
Figure it out,
Yeah.
exactly. So, but at my position where I am right now, I don't see an issue in refinancing or expansion. Reason being, in the commercial side, the income of the property plays a much bigger role than the person who is there. Of course, they see the borrower profile as well, just to make sure that whether this person can close or not. But the income from the property plays more role. Second is, if you make a change slightly in any reducing expenses, the value of the multifamily increases at a much higher. So one of my friend, he owns a 33 unit building. So what he told is, if you just reduce the water consumption, that moves the needle very high in 33. Like, imagine the small change multiplied by 33 times. But the same thing you cannot expect in a single family home. So that's the power of higher units. And then another thing that is there is that the more multifamilies you buy, your net worth, so which is a critical point. So it helps you in buying the next property.
Yeah,
so as you do more, your net worth increases.
Yeah, recognized incomes according to the banks, right? Because they're legal units, unlike a non-conforming single the duplexes, triplexes, and whatnot, right? Where these are performance-based properties that will add value to you.
Right.
Yeah, it's very interesting.
I do recommend you start putting all of your assets into a corporation, like under a corporation, because that will really help you for the mortgage
so we are
moving forward.
Working on we formed the corporations, and our purchases are going to be in that through corporations only.
It seems like you're going through the stages actually.
Yes.
Where you kind of like start off with some of the residential, you start to move into commercial or multifamily, and then you start to incorporate, and your investor group starts to mature. It's very interesting to see this pathway that you're taking.
Exactly. Challenges will be there. Continue to do that, learn from them, and now imagine that now in Newfoundland, this was the first property, but now I have formed the team. I know the pros and cons. Where is the, like for example, the title search and insurance, it takes time.
Yeah.
So for the next deal, I have a team already ready.
Yeah.
So, and I know the market, I know the rules. You can expand even further.
Yeah, you're not perfect. You're learning as you go as
you
well,
are learning.
right?
So challenges will be there, but keep moving forward or upward, whatever you want to call.
We do want to wrap up a couple of things, because if we keep talking, I think we can talk forever.
Yes.
But I do want to ask you a couple of critical questions before we do.
Sure.
First of all, what would you say, we were talking about stress, we're talking about challenges, right? What would you say is currently the biggest challenge you're facing?
How you can handle the bigger numbers, like that is the biggest challenge. For example, I am comfortable for 1 million and all, but I will get freaked out if it's 2 million, 3 million and above. So you need to get comfortable with numbers. The more number of units are there are many more strategies.
Yeah.
So get comfortable with numbers. That will be the biggest roadblock you'll face. Another thing will be out of province investing. That's where I think the major challenge lies. And third is investing in education. Like that's the first place where I see many people not even taking the first step. So believe in the system, believe in the community. If they need any help, how the community has helped me, feel free to contact me. I can let them know, but that's the biggest roadblock.
If anybody wanted to reach out to you for any advice or any insights, because it sounds like you've done what a lot of people are looking to do, especially like a lot of our viewers, they're newer people who are getting into real estate, and they're looking for just the break-in point, right? How to make those first motions, especially when you don't feel like you have enough. Some people, even when they're talking about getting into real estate, they're just like, how am I supposed to save? Right. But they don't realize the power of partnerships, which is what you're doing. Really, when you're raising money like this, you're forming partnerships, relationships.
Exactly, collaborations, private investor. So yeah, that's a very right point you have touched, that don't try to do everything on your own, or one day you will save money, then you will buy your first property.
Exactly.
That's not the right way to scale. There are good systems, great mentorship program, and I'm happy to discuss how it has helped me.
So how do they get in touch with you? Is it best to get in touch through Facebook, email? How do you like it?
Instagram, my Instagram handle is Suman Chakraborty 812.
Okay.
So just
we're gonna make sure you guys to leave some information about them like somewhere down here, so you'll be able to check it out, or in the description if you want to contact Suman for more information about that. Very last question before we wrap things up, I just want to know if there's anything that you could have done differently. I know it's only been 2 years.
Yeah,
It's a short time,
no,
so it's not a lot of time to reflect on it, in my opinion. But
yeah,
if you had to do something a little bit differently, what would you have done differently?
I would have first focused on multifamily, like a bigger unit. Or this was one question, like when I joined Melande program, like I asked the same question to them, and they said one more thing, like go for a duplex, rent out one, and stay in one. That is one, or go for a multifamily.
Yeah.
So I would have done one of these two things.
Yeah.
So that's my recommendation.
Yeah. It sounds, by the way, like when you're no longer limited by only what you can do yourself.
Yes.
Then you think, okay, yeah, multifamily would have made more sense.
Made more sense. Absolutely. Anytime.
Because
I'm okay to be on a rental property, sell these houses, and focus more on investment property. So your goal should be first start focusing on investment property, not the biggest house in the city.
So guys, if any of you have any questions for Suman and you want to contact him, again, we're going to leave some information about him in the description below or somewhere here on the screen. And if you have any questions for Ping or I, or about how to get into real estate investing, you can also contact us. As always, guys, make sure to like this video, subscribe to our channel, or review us if you're watching on a podcast platform. See you on the next one.